Good afternoon, everyone. I know it's pretty late, so we will try to make this panel discussion more efficient. And I actually prepare a lot of questions, so I will try to pick the most significant ones and seek for the inspiring solutions, answers from our panelists. Okay. I am Tianwei Zhang. I'm currently an assistant professor from NTU, and in this panel discussion, our topic is about the future of blockchain trends and the predictions, and we try to say try to look for what will happen in the future with blockchain technology. And in this panel, we actually have 4 panelists who are experts and also pioneers from the blockchain technology. And the first panelist is Professor Wang Neng. Okay. Yeah. Prof Wang, yeah, please have a seat. Yeah. Yeah, Prof Wang already gave a very interesting talk, and I do not need to give more introduction. And our second panelist is Prof Bao Te. Prof Bao is currently an associate professor at the School of Social Science, NTU, and his research interest includes experimental economics, behavior finance, and real estimate economics. Okay. Our third speaker is Mr. Xiaoqing. Mr. Xiaoqing is currently the managing partner of Arcane. He has started to take the role of the co-founder at Arcane since September 2021, and which is a Singapore-based company. And his interest focused on the early stage Web3 project, NTU Capital, and incubation. And additionally, Mr. Su also serves as an independent director and consultant for several companies with Arcane Group's portfolio. And he also holds a position of investment director at Deal Blossom Limited. And our fourth speaker is Ms. Jasmine Zhang. Ms. Zhang is currently the founding partner at A&T Capital. And oh, sorry, it's not AT&T. Okay, sorry, A&T, yeah. Okay. Her has 5 years experience in crypto investment, and she was previously quant research at investment banking and also consultant in telecommunication industry. Okay, all right. So let's again welcome all our 4 panelists for this panel discussion. Okay, right. So. So because it is interesting to see that we actually have 2 professors from academia and also 2 industry practitioners. So our questions actually will be the mix of the academic perspective questions and also industry perspective questions. Okay. So first question, I would like to ask some opinion from our 2 professors. So because every time when we talk about blockchain, especially with the connection with finance, we always think of DeFi. So I just want to check, from the academia perspective, how do you view with DeFi?
First, I want to thank the organizers for having me here. It's really great to be here. So just to answer the question, the way I think about DeFi is it's, in the long run, very ambitious. I mean, let me just first talk a little bit about my long run sort of perspective. The reason I'm very ambitious is optimistic is in the long run, okay, that's an important adjective, is the underlying economic principle and its internal coherence makes a lot of sense. So here's what I mean. In academia, what we do is we write our models, we try to capture the real world. And in practice, of course, practitioners observe the world and try to take action on the spot. So philosophically, we are 2 very different types of agents in the economy. So for that reason, if you look at, sometimes when students take a course, say financial economics, they think it's abstract, it's too stylized. The reason is because the world is complicated. The way you understand the world is to simplify until you can no longer further simplify to get the essence of the problem. Now, so in some sense, I'm going to say this, it sounds counterintuitive, but in some sense, theory or academic research has been way ahead of practical, the real world practice. The reason is not because we are smarter, it's because of the nature of the job. Because, as I said, the world is too complicated, you have to abstract. Now, what's happening in today's world is, thanks to the blockchain technology, the ability to track information, the ability to write much richer contracts using smart contracts, enforcement, the ability to commit to contracts, the ability to reach broader agents around the world because the barrier is reduced, the ability to minimize frictions, to reduce transaction costs, to improve transparency, right? All these issues that have been brought up throughout the day by different panelists and the speakers make the models that we write down, which were originally intended to be as a benchmarks. I'm giving you an example, like Eric DeBrew economy. The two giants in the profession, economic star there, it's essentially just a way to say Adam Smith's invisible hand. All these actually become really, really closer to actually what we observe. Because, right, you can have these approval function, for example, in blockchain, which allows you to write a very long state contingent contract. So should one condition not be satisfied, the contract is not going to go through. So these atomic transactions are very, very powerful. It really enriches the agents, the private agents' ability to share risk, to realize gains from trade. So conceptually, I think, I call it triangle. So you have blockchain, which represents technology. You have financial engineering. Let me zoom back to DeFi. I'm going to give you a few examples. For example, the financial engineering idea, right? It started at least since early 70s after Black-Scholes and Merton published their amazing works. To this day, we teach students. But until maybe 5 years ago, I was telling students, here's my big warning, okay? None of these conditions are satisfied in reality. Take your own poison with a lot of discretion. Be really careful, be all that. So actually, if you look at what's been happening, what's on the DeFi platform, the contracts you're able to trade, the contingency you can build in, the ability to actually to commit, okay, and to find counterparties, the distance between markets and contracts actually is getting narrower and narrower. So this is, if any, it makes me feel like theories that we used to deem as idealistic starting points are getting less and less abstract. So I mentioned the triangles. I've mentioned the blockchain, which is the technology that enables or facilitates these transactions with a much longer horizon, much greater state contingency, much broader, much greater liquidity, and much broader outreach. And the financial engineering worked out all the mathematical machineries that allows you to address these state contingencies, which is what smart contracts are, right? And the third leg, which is the contract theory. So all these three were developed by different experts in different domains. What I love is that actually now all these contracting ideas, I spend a lot of time writing contracting models, actually now can be implemented using financial engineering approach on blockchains. That to me is, as a researcher, I feel that's almost like a dream on the way to be realized. Of course, I'm not giving you overly rosy picture because along the way, various issues have been raised, right? Privacy issues, the KYC, AML, all these issues have to be met. But nonetheless, what we teach our students, what we do in our research, and what I'm excited about, I think actually getting closer to reality. So the distance between academic research and what people do in reality, I think, is being reduced. So that was my long-term perspective. Let me stop here.
Yeah. So maybe I'll just briefly follow Prof. Wang's point. I think I fully agree with that. Or maybe put it slightly differently. we can say that theory is really demanding for reality. Sometimes people criticize for theory for being unrealistic. It's because that our reality, our technology in reality is not mature enough or advanced enough to be able to support or to test on properties of the theory. So actually, I also became very fascinated by blockchain, I think mainly because of smart contract, and also my interest in contract theory. So very simple example, if there are people from economic theory background, economics background, we know that in the traditional economics, we have many theories based on transaction cost. But if you think about in the old days, what is the cost of signing a contract? Is that a contract of the piece of paper, or the cost for you to hire Antonio for a lawyer, or what is that, or the cost of suing it, bringing it in front of a judge and so on. So in the traditional world, there is just no way to find a clear definition and measure transaction costs. But with blockchain, it's just so simple to measure the transaction costs. And secondly, I think in terms of application of theory, DeFi or smart contract also provides a very, I think it's also a shining perspective in the sense that, so for example, I still remember I used to read a book written by Robert Shiller. So Robert Shiller is a professor from Yale University and also Nobel Prize winner, I think in year 2013. I think he has the most famous book called Irrational Exuberance. I think another book also about using good finance to help the society. I think, for example, traditionally we think that insurance risk can only be hedged or protected by government providing you government unemployment. Unemployment can only be hedged by unemployment insurance provided by the government. But then Schiller said that in a very advanced economy with very advanced financial market, why can't we have unemployment insurance and all these kind of things? But traditionally, I think it's just very hard to fulfill that using the traditional technology. But I guess with smart contract, many of Schiller's vision about this kind of financial product tools to hedge all kinds of life risk can be addressed by technology. Yeah.
Okay, thank you for the very interesting opinions. Okay, my second question is actually because we have two investors, so my second question is for the two experienced investors. Okay, so because we know that with like the faster development of the blockchain technology, it actually revolutionized and impact a lot of like structures and also like different perspectives. So I'm just wondering like how does the blockchain will like impact the cost structure of the capital markets, like for instance like the IPOs or the fundraising?
Yeah, okay. I think this is pretty simple, I think, question, because when you're thinking about how blockchain technology are reducing the costs of market transaction costs, it's really significant because blockchain actually provides transparency on different counterparties with the same consensus of what price is actually being traded. But the hardest part is actually, does the other party willing to share the information with you? That's actually the biggest part. Why people are trying to empower with a zero knowledge graphic or all the other encryption, because trading or financing itself in capital markets is actually the differences between the message and the information that you know but the other don't know. That's how people are trading on the differences between that. So you know more than, you know the financial balance sheet of the other company, but you don't know, right? Then you have a better prediction of the market value of the product or the shares. So I think what could be actually helping is actually we can actually tokenize the current standardized real asset, which means it's actually a T-bill. It's pretty simple to tokenize it because the terms of the T-bill and the asset is actually quite simplified. But if you are talking about something that's unstandardized, which means there's a private issue debt by a private company, that the issuer has different credit risk, and you're dealing with different counterparty, then the asset are, I don't think blockchain are able to actually solve that problem. That's also related to, I think there's a lot of professors mentioned that how do you actually making sure your data that's authorized it on the blockchain in the right way, which means there's no misbehavior by putting the data on chain. Even though you have a different data provider actually giving you the data, but there's still chances that when during the IPO process, there's a lot of auditing firm, I think investment banking, a lot of files need to be get filled out. But in crypto, people do it in purely blockchain way, which means they call it IDO or IEO. The token are initial launches on the public chain by anyone who have a wallet address are able to participate with their token, or there's most commonly usually right now is actually people don't do IPO, people do airdrops. Why it's become a phenomenon is because when a blockchain or an application that at the early stage, they need to bootstrap their user, they need to decentralize their token stakeholders. That's the best way to actually, that's actually to, I think, Wang Neng's theories. Yeah. How to actually calculate buyer or the user acquisition costs with the carrying costs is actually all the platform developer actually thinking about, hey, how much percentage of the token that I should be airdropping to the end user, exactly, and how much that I should recruit, and for the maintain of our ecosystem growth, right? I think that's a big mathematical theory and people need to figure out. And the tokenomic, I don't think any of the public chain or the company that have a perfect answer for how this token needs to be designed. It's because of every ecosystem has their own, I think, functions and different needs and different stakeholder. But I think Ethereum itself, right, even like today that he speaks, what he's trying to do is actually make Ethereum as natural as possible, as the perfect ground for settlement only, not consensus layer, it's settlement only. I think if you want to add more function on the different category of the chain or the features, you should be on layer 2 or layer 3, which is, I think, the industry right now is quite well developed. I think pretty much that's all the question.
Thank you. We also want to hear from Ms. Zhang's opinion.
Yeah, I think Xiaoqing has already made it very clear. I think it's also a very straightforward question. So I think I'm just going to speak maybe from another perspective, how it is really reduce the cost in terms of the activities from all of the involvement from all of those financial institutions. So for example, earlier, Mr. Huang, from MasterCard, they were doing all of these things with MasterCard, with NFTs, with their tools, with a wallet and so on. It shows actually the cost they could actually potentially reduce in terms of onboarding new users, in terms of cross-border trading. And also recently, one of the layer one protocols called Solana, they actually also started to work with Visa to enable USDC trading. So I think it's also a big reasoning, or you can see why it reduced the cost of financial capital market. So I think that is just from another perspective can prove it's really the involvement activities from all of these big organizations are really involving, trying to engaging for years, to having blockchain applied to their system.
Could I add something here?
Sure.
So inspired by their two observations. So here's what blockchain cannot solve by definition, which I think Xiaoqing brought up. So the different kinds of what we call frictions in capital markets. Now, if this friction is about adverse selection, meaning, the issuer has something that I do not know, of course, putting on a blockchain is not going to solve the problem. But that's the beauty, right? Because the economic theory tells you when you write a long-term contract, if you worry about, say, IPO or ICO, if you worry about the issuer's inside information that you do not have, then you're naturally disadvantaged. So in that case, there is no reason you should expect to achieve perfect efficiency. So that part of illiquidity discount arising endogenously from what we call adverse selection should be part of the friction. You want that. Now, on the other hand, some transaction costs, such as, okay, IPO used to be a clubby business, right? Still, to some extent, you're a banker, you're a high net worth individual, or, you get to the front of the queue, average Joe around the world doesn't get to share the profits, right? So that part will be disintermediated, which I think is a great thing that the blockchain technology can deliver. And the blockchain technology, thanks to theory, should not address the adverse selection issue. If you really think that the issue has something that's absolutely inside information that you just have no idea. So I just want to pick up on that. I think that's, we're just saying the same thing a little bit differently.
Yeah, but I think just want to add a few more of the comments based on what I think crypto is more about, or not blockchain is more about. I think crypto is actually ideology. Right. It's rather than a technology. The Bitcoin invention itself is actually based on the crash of the financial crisis in 2008. It's not because of the technology that he feel like, hey, blockchain is the great invention. No, he just think what blockchain can facilitate into what he's trying to achieve in the ideology aspect. That's how Bitcoin is invented. But nowadays, I think people are more actually know how to use blockchain itself, right? Because I think when you're talking about saving money costs, but what I mentioned is what crypto is really about is actually anti-inflation in some aspect. Because even from Turkey and all these South American, Latin American, people are holding crypto not because they want to buy crypto, just because of they rather holding it.
Exactly, because the convenience yield as a hedging outcome.
Thank you for the question. Okay. So due to the time limit, I will ask the last question, which is actually pretty general, okay, and hope to get very straightforward and concise answers. Okay. So because we know that now, like the blockchain, the Web3 technologies are becoming more institutionalized. So I just wonder, like, what would be the implementation of for the traditional financial institutions?
I think it's also quite simple, right? I think MasterCard also just showed us how institutional financial institution can implement into the business. And I think when people are saying that crypto is trying to be disrupted about traditional finance, I think it's actually wrong. I think crypto actually just an add-on to alternative solution for the financial services that's not fulfilling part of the demand of services. For example, if you don't know, JP Morgan actually have created their crypto blockchain network for 6 years already, and it's trading billions every day for South America for cross-border remittance transaction. It's not a public chain, but it's national chain. It's JPM chain. So that's quite simple that institution that they want to implement it, but it's just because of they need to thinking about how to make sure the data. For example, your client's data is KYC'd, right? You should be encrypted. But if you are working with other institutions, do they actually protect the user data or follow the same rule as your ecosystem as well? There's a lot of uncertainty. That's why people are hesitating on build a project on blockchain on public chain, because the standards are universal. But institutions prefer to have something that they can customize based on their revenue needs or their business need and that related to their revenue, right? If you're a financial company like PayPal, right, they just issue their stablecoin, right? If you are back to Facebook trying to issue Libra, right? So I think there has been a lot of attempt to try to build a blockchain-related project in the traditional financial or technology company. Even Elon Musk are right now implementing it a bit. But I think it's just how people are getting more used to cryptocurrency or blockchain, how the actual use case are more related to their daily life. I think it would be growing faster in the developing country rather than advanced country, just because of the financial system is so mature already. There's no need for them to actually restructure everything and put the blockchain to replace all their traditional system. Even it might more efficiency, even it could be more cost saving, they still don't have the interest to do it. Yeah, I think that.
Thank you. Yeah, I think like what what Xiaoqing has mentioned about like MasterCard has been doing is like really great. But like I think it's a place also like with like a big potential in terms of investment, like a revenue, like a streams. But like I think like for a fund, even though it is like a profit driven, we still want to make it like more long term and be able to invest in things that can really do good like for the society. So I think what would be important is like financial institutions not only focus on existing users, like to make a better user experience like for them, but also be really able to like the old ideology, which is like to banking like the unbanked. I mean, there are numerous of people like in the third world countries. I think it's very hard for like a developed country like in Singapore, like to really understand how people really live in Latin Africa and so on. But like I've been to like a few countries like in Cuba and so on. You see people are struggling there when people are like kind of able to like not able to like really pay their like tuition fees. They have to like they were so happy they were launching like some kind of NFTs, which I have been for a long time think it's sorry, I wouldn't say bullshit, but like it was like a scam. They were able to like make money for it and then being able to pay their tuition fee for it. I think just be able to provide like this kind of like basic financial infrastructure for those people, I think would be like really important. So it's not only to enlarging the current like richer like economy, but also be able to let more people able to engage with it. So to say financial involvement. So I think that would be something would be really cool to see like in the future, and also would be something like we want to really support as a fund as well, because we want to also like really balance the ethical like also like the profit driven. So yeah.
Yeah, I mean, I would say, the traditional intermediation finance, it's funny, right? Because again, when we teach finance, we barely talk about intermediation, but if people who go into finance industry, it's all about intermediation. It's about market making. It's all about being a banker and so on. So I think one thing that's really important, it's been brought up by all the other three panelists in different ways, is in the end, it is about coming out with more efficient ways to do things, to lower the entry cost, to make less privileged people have easier access to better manage risk. We talked about, the high inflation, the value preservation, and market creation. So it is about making investors or consumers to have lower transaction costs, have a better risk management opportunities, as advocated by Schiller, quoted by Professor Bao. So I think that's exactly the right direction. So to that extent, I think the traditional financial intermediaries, institutions, they are learning, but I think it's a healthy thing. I think to some extent, some of the fees, to me, will be inevitably going down. So in that sense, I think it's a force for good change. Okay, because that's how, on average, in the long run, so how competition, how technology does, which is to lower the marginal cost, take out the middleman whenever you can, right? So I think in that sense, I do believe blockchain-enabled smart contracting facilitated transactions and platforms will have in the long run, okay, I can only talk about the long run, have a good future.
Okay, thank you.
Yeah, I think maybe the impact will be just in both directions. So basically, the blockchain can help traditional financial industry to tokenize the assets, the traditional assets. And the second thing is that blockchain is also very active in making financial innovation, especially in making new financial products. So for example, a perpetual contract, which was not available in the traditional financial markets. So I think the traditional institutions may also want to study the new features and the properties of these assets and carefully consider how can they improve the performance of the portfolio by editing those assets into their holdings. Yeah.
Okay. Thank you. Okay. Thank you again, and let's thank all the panelists for sharing such insightful thoughts and also ideas. Okay. And let's welcome Prof. Wang to present the token of appreciations to our panelists.
Okay, now let's welcome Professor Bao Te, co-director of NTU Centre in Computational Technologies for Finance, to give us the closing remarks. Welcome.
Thank you. All right, I'm sure everybody is waiting to go for dinner. So I'd like to just thank everyone for staying till the end and coming for our talk. I'd like to also especially thank our presenters for taking the time out to share their insights and their thoughts with us. And of course, lastly, not to forget, to thank all the organizing help as well as our staff who have actually done such a wonderful job of managing the organization and the registrations. And also just to ask you guys to keep a lookout for future events from us. Thank you so much.
Okay, our workshop is about to end, but for NTU postgraduate students, the e-endorsement is given by CCTF. If you didn't register yet, please remember to mark your attendance at the registration counter before leaving. And ladies and gentlemen, this is the end of today's workshop. Thank you all again for participating in this incredible event. We hope to see you soon in our other blockchain events, and please continue supporting our NTU-CCTF. Thank you. Okay, our workshop is about to end.